Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Yesterday afternoon, the Reserve Bank Board left interest rates on hold, as was widely expected, but the central bank did revise its inflation forecast to 3.8%, up significantly from the 3.3%, I think it was, in its previous forecast. My guest today is Westpac's Chief Economist, Luci Ellis. Luci is in a very unique position to comment on what the Reserve Bank Board might be thinking. Until October last year, Luci was Assistant Governor at the Reserve Bank. Luci Ellis, welcome to Fear and Greed.
Thanks, Sean. It's great to be here.
So what did you make, firstly, of the outcome and the wording of the statement from the Reserve Bank Board? They weren't overly aggressive, but overly hawkish in what they thought on rates. Did that surprise you?
It didn't, actually. We did expect them to become more hawkish in their language, and they did. And they talked about how they were being vigilant around the upside risks. But I think they're also mindful that in November, they reacted and took out some insurance to some upside risks after the September quarter CPI. And then, of course, the December quarter CPI and all the real side data in the December quarter turned out to be below expectations, and their February forecasts went straight back down and reversed out the forecast upgrades. They are expecting a bumpy ride, and I think it's important that they don't treat every bump as a change in trend. It was right that they were more hawkish and more vigilant about the upside risks, but I think making sure that this isn't just yet another bump is the appropriate thing to do.
Now, Michelle Bullock, who obviously you worked with closely for many years, is making it very clear she doesn't want to give an indication of whether the next move is up or down, and that is her job as the Governor of the Reserve Bank. We respect that. Luci Ellis, you used to be in that sort of role. Now you're in a totally different role. What do you think will happen to rates?
Our central case is that rates are on hold. We do think there are upside risks. We think there are states of the world in which they do end up raising rates, but we just don't think that's the most likely outcome. We look at the configuration of incredibly weak consumer spending, of a household sector that's been squeezed, of a labour market that is easing, although some of the lagging indicators like unemployment haven't eased as much as some of the leading edge indicators such as job ads or vacancies. So things are turning out broadly as was expected. Inflation is coming down. Discretionary inflation, things like dining out, are all actually very close to their pre-pandemic rates. But there is this sort of lingering element of, indexation, of insurance, and of course the outworkings of strong population growth and what that's done to housing inflation. And all of that will unwind over time, but I can quite understand that the RBA is very alert to the risk that this doesn't come down fast enough.
So your central case is that rates are on hold. Do you think the next move will be down rather than up?
If things turn out as we expect, so our central case will then, around about November, we expect the RBA would have enough comfort to have seen enough of a decline in inflation to be ready to withdraw some of the tight stance of policy. The board does assess policy as being tight, and they'll get to a point as inflation starts to approach the target range that they no longer need to be as tight, and they can start withdrawing some of the tight stance of policy and come back to something a little bit more average in terms of the level of interest rates, and no longer be constraining the economy. But we just don't think they have enough comfort with the current trajectory, particularly in light of the upside surprise in March quarter. So we just think they're going to wait for more information. If inflation does keep coming down as they would like, then they'll be in a position that they can start cutting rates. And we recently pushed out our assessment of when that was likely to November from September.
Stay with me, Luci. We'll be back in a minute. I'm speaking to Luci Ellis, Group Chief Economist at Westpac. Luci, you've been inside the bank, and to most people out there, the bank is just this big black box, or grey box actually, on Martin Place, the top of Martin Place there. As you talk, you sound like a true market economist, but I mean, all these discussions that the market economists have here, presumably they're all taking place inside the bank. My question, is the debate much different inside the bank to outside the bank?
Well, I think we're all looking at mostly the same data. There are some differences in the sense that, for example, the Reserve Bank has its liaison program. So it's talking to firms in a somewhat different way. I mean, obviously, we're a bank. We have a lot of customers. We talk to those customers as well. And we do, glean insights, in an increasingly systematic way from our customers. But we don't have, over 20 years of a liaison program in the same way. But by and large, we have the same data sets. There are some things that the public sector has access to, like single touch payroll and some of the micro data that the private sector doesn't have access to. But all the macro data, we're looking at it in very similar ways. Where there has been a bit of an evolution has been in the outworkings from the RBA review. Some of the recommendations there were things like that they now needed to be more explicit about their assessment of where the economy was relative to full employment and where the economy was relative to potential output. And what that's doing is making the RBA staff put their models more front and centre. I think they have quite sensibly made it clear that no one model is perfect, that you need to use judgment. But what I am seeing is a bit more of a shift of the way the RBA is conveying its analysis to being a little bit more model-driven and a little bit more like some of the other advanced economy central banks where you have much more of an academic flavour.
And what about Michelle Bullock, her job, not so much as an economist, I suppose, but as a representative of the bank, particularly because she is now giving press conferences which none of her predecessors ever had to do. How do you think she's evolving into that role?
I would just point out that for many, many years, the RBA had been rolling out its senior staff to give speeches where you had live Q&A that was recorded and transcribed afterwards. And so in many respects, that was a substitute for media conferences. And one thing you might have noticed is there's actually been a lot fewer speeches outside of the policy decision. Now, part of that's because, obviously my successor is new, the deputy governor's new, everyone's sort of still settling in. So you haven't seen a lot of the other senior staff giving that many speeches. I mean, the Assistant Governor of Financial Markets gave a speech that was very straight down the line about their new operating model, in how they're going to manage the level of reserves. You had the Assistant Governor of Financial System talk about SME finance, but you've had very little communication outside of those media conferences and parliamentary appearances and the sort of the policy round about monetary policy and their assessment of the economy. And so there's been a trade-off between the kind of discussions about the economic outlook that used to happen and what's now happening. So we're getting the media conferences, but we're getting fewer speeches and we're not getting speeches with Q&A after them. And so it does appear to have been a bit of a trade-off, at least in the short term, while the other senior staff settle in. I think the people who were clamouring for a media conference may need to have been a bit more careful about what they wished for, because there already was a lot of that opportunity to communicate and to communicate off the cuff. So in that sense, Michelle and all of the other senior staff have had plenty of practice going up before Parliament, going up in media Q&A. This is just a much more scrutinised event. I will say the way the RBA is communicating now has definitely improved. Some of the things they did on the SMP made it much more accessible, and they're all things that people would have liked to have done before, but sometimes you have to be told to do it by someone external. That's just kind of the way the public sector works. And, I think it does really validate at least one of the recommendations out of the RBA review, which was to resource their communications function differently and communicate differently. And I think that recommendation has been heard and responded to.
Now, Luci, I think I'm right in saying you started at the bank in 1991. In fact, I think I'm right in saying I started as a graduate on the same day you started as a graduate at the Reserve Bank.
That is correct, and you had the desk next to mine.
Indeed.
Yeah, well, I don't think I would have. That was something that I would not have forecast.
No, nor I. Do you miss it? I mean, I'm sure you're loving working at Westpac, no doubt. But do you miss the bank, given it was such a major part of your life for such a long time?
Look, I think you get to a point in your life that it's time for a change, and the right role came up at the right moment for me. So, look, I'll be honest, 6 months in, I am really enjoying it. I couldn't be happier having moved. I think it was the right thing to do. And, I think it's provided an opportunity to, join the dots in a different way. I think, I was always, very mindful, having spent quite a bit of time in the financial stability side, about, the need to see the system as a whole and connect everything together. And, it's nice to be able to talk about monetary and fiscal policy together instead of just about one of them and pretend that the other one is something that you don't even comment on much.
Yeah. Luci, thank you very much for talking to Fear and Greed.
You're very welcome. Thanks, Sean.
That was Luci Ellis, Group Chief Economist at Westpac. This is the Fear and Greed Business Interview. Join us every morning for the full episode of Fear and Greed, Australia's best business podcast. I'm Sean Aylmer. Enjoy your day.